Welcome, everybody, to another episode of the AgView Pitch. We're heading into a new week and also a new year. We're going to have this out on Sunday as normal, but we're going to be talking about the markets on January 2nd through the 5th, first week of January. So we have with us today Matt Bennett. Matt, how's it going?
It's going well. Just wrapping up the year, so excited to have another 3-day weekend here.
Yeah, for sure, for sure. So let's talk about the first week in January. Sometimes we see interesting things. We're coming off a time frame when the trade is really light. Things can move a lot, up and down and stuff. But talk a little bit about some of the things that producers need to be looking at as we head into this first week of 2024.
Yeah, I mean, there's a few things that come to mind. You and I talked before we started. There's been some real opportunity at the end of the year. A lot of these end users opened up, for instance, Jan contracts
Hmm.
and tried to entice with free DP and all kinds of neat things. Producers seemed fairly tight-fisted, so there were some really nice basis pops around the country. We have to understand that first week of January, that's not going to be the case. And
Hmm.
so we do know that there'll be a lot of contracted grain moving around. Basis is unlikely to see any appreciation anytime soon. But at the same time, these markets have been awful depressed. So, where are you going to look at for a rally type action? Well, if the forecasted rain for Brazil, which continues to seem to gain traction, if it occurs, you're going to have a really hard time, I guess, getting the kind of rally, I thought we might see. Again, market's been pretty depressed. It's been kind of a lackluster end to 23, if you will. But I got to think sometime over the next 3 to 4 weeks, we could see some support in here, maybe even a little bit of a rally action. I think that the market probably is going to get that opportunity. Typically, we see it at some point in here this time of year.
Hmm.
It's just right now. Right now, it looks rough, Chris. I mean,
Hmm.
you got to ask yourself what's going to cause it. I was talking with Joe about that, Friday morning, and we both kind of agree that you need a catalyst, and maybe it's something none of us know about yet. Uh, but at the same time, we can talk more about this. I think learning something from the way that 23 manifested itself to me is something that we need to be very, very aware of and cognizant of how it could affect the markets in 24.
Hmm. A lot of times we see some strength that first, part of January, historically we have anyway. Anything of hope there that you guys are seeing that could give us some opportunities? And then if we do, obviously, you got to watch basis close too, because the price goes up and what's basis do? It goes the other
Yeah.
way. So,
Yeah. I mean, there's definitely, there could be some money flow. A
mhm.
lot of new money could come into the market here at the start of the year. Quite frankly, some of this money lately has been looking for a home. There's a lot of good guaranteed money out there, though, still. So, it's tough to think that you're going to see a lot of flow into commodities. But the dollar, obviously, this last week was fairly weak overall. You know, uh, Actually some of the lowest posted prices that we've seen in several months. And so, that should be supportive towards commodities, but at the same time, again, you need a catalyst for a sustained move. I could see maybe some money flow coming in here and get propping us up. But like you suggested, if you're looking to move old crop bushels, this is not the time of year, to expect basis to hold steady if the market rallies, especially if the USDA is correct, and I think that they are, in that we have the largest overall crop that we've ever seen, and that's about 15.2 billion bushels. And people say, well, geez, we didn't have the yield for that. Well, it doesn't, you don't have to when you plant 95 million acres,
Yeah.
So we got to understand there's going to be a wall of grain every time you see some sort of a rally. And with that being the case, it's going to be hard to get a sustained move higher.
Hmm. So the next question I have as we move into the month, I want to not get too far ahead of ourselves, but we do have a pretty important report coming out on the 12th of January. With all of your teammates, you guys do a great job of kind of looking out ahead and kind of watching for those hurdles, watching for those potential opportunities as well. What are some of the things you and the rest of the team are kind of looking at for um, things to watch or to pay attention to as we head into that report, and what, if anything, should we be doing in front of that?
Yeah, I mean, so going into the report, we know a few different things. I mean, whenever I try to figure out price direction moving forward, I always want to look at what our balance sheets look like. So for
Mhm.
corn worldwide, uh, we don't have a story. You've got a what 314 million metric ton carry. That's all kinds of corn. We don't have any fear there. Whenever we look at the U.S. balance sheet, you go from a 1.3 up to a 2.1 plus. With that being the case, obviously we're increasing stocks by over 50%. So
Mhm.
it's hard to say that you can get a bullish feel, either one of those, US or world, for corn. Beans, if Brazil does get all this rain, you still have an average type crop. You're going to have plenty of beans in the world. A couple the start of the previous marketing year, we were at 99 million metric tons. Basically, we ended up at 100 this last year. That was with Argentina having an epic, like biblical level drought.
Mhm.
And so this year, let's say Brazil comes in at 155, which is 10 million tons off of the original estimate. Well, if Argentina raises the kind of crop we currently think, given the fact that they had that horrific drought last year, they go from what, 24, 25 million metric ton up to the forecast of 48 right now. So overall, South American production is probably going to be higher. Worldwide, you don't have a story. And then in the US, it's tight. Okay. So, yes, you've got crush industry expanding, a lot of good things going on, but world flow of beans. I mean, we're going to import beans into the US, into the Southeast. Yeah, I think it's possible. So I go into that report and I'm looking for something that's going to change that trajectory for me. Whether we tighten up the balance sheet a little bit, I don't know. But the thing that's tough for me, Chris, is that, when you take the yield from August to September to October down, and then you turn back higher for both corn and beans in November, the history doesn't necessarily suggest that we're going to get a yield cut in January. A lot of times when you raise that yield in November, you see an additional increase. And I think with the Eastern Corn Belt this year finishing as good as what they did, I guess I'm a little wary that we're going to get a bullish surprise in January. So right now we're still hoping for some sort of a friendly surprise, but at the same time, we have to be aware that this report also could have some bearish surprises in store for us.
If it does, is there any kind of protection or anything a person, I mean, there's people sitting there with, and you know this as well as anybody too, there's a lot of uh hope bushels sitting in grain bins right now.
Mhm. Yeah,
I hope we get an opportunity bushels.
right,
So, is
right,
there anything that a person should maybe be thinking about doing, or between now and in that
right.
first week, you get these little rallies, be jumping in. What's your take on that?
Yeah, I mean, when Dees went off the board, the carry out to July was like 40 cents. I've never seen that before. Okay.
Yeah.
So you look at July corn at 494. If I've got a bunch of bushels in the bin, I think we all know basis is going to be better at some point in the future than what it is first week of January. So,
Yeah.
if I'm concerned about bin bushels, hedge the carry in the market, go out to the July and hedge some. You say, well, gee whiz, Matt, what happens if we go to 520? If we go to 520, you're still likely to see basis work in your favor over the course of time whenever bushels aren't as plentiful as what they are at the start of January. So if you're super concerned about it, I think just locking in a price basis the board isn't a bad thing to do. Now, there's a whole lot of moving parts here that we have to understand how these things work. And yeah, carry market, it's a little tougher market sometimes, than whenever the market's just screaming for your bushels when you've got this big inverse, and that's what we've been blessed with here over the last couple of years. The market just comes to us. We want your bushels. We want your bushels. And, there's been times over the last two marketing years, actually, that we held on to bushels longer than what we should have, and we're still rewarded. So if we're honest with ourselves, we haven't had to be rocket scientists to be profitable in farming in 21 and 22. 23 is a little skinny for a lot of folks, but got a lot of money in our pockets still from 21 and 22. We're gonna have to get better at what we do, be a student of the markets, and make sure we understand what a carry market means for us and how we can use it. And if you got bushels at home, hedge them like the elevator does in town, because that's what they do is they hedge the carry in the market and they wait on the processor to want bushels more than when those bushels went in the bin.
Hmm. That's all really good perspective. And the other thing too, to tack on to what you said, I think is, that July 4.94 corn price, if the price does go up 30 cents, this is going to lead me into the next question is there's going to be 2024 crop to sell too, right? Not just the 23 crop, but that's going to give us some additional strength, not one to one, but give us some pretty good opportunity probably on that D's 24. Talk a little bit about that,
Yeah,
kind of
for
what you're
sure.
seeing, what people should
Yeah,
be
the
thinking.
farmers always long, So you got to understand, if you're super concerned about old crop and you do something and it doesn't necessarily turn out exactly like you thought because of
Hmm.
a rally. I mean, what a beautiful thing. Now you've got, maybe it's only a 15-20 cent rally for new crop, but it's still a rally. And so uh,
Hmm.
I want everyone to understand, last trading day of 2022, D's 24 corn settled at 562. And so we basically lost about 60 cents. And so the question I posed on Twitter actually on Thursday was, what do you think about this 505, 506 D's 25 price? Do you think
Hmm.
that we're going to see a 60-cent drop? And I had all these different scenarios. And so 71% of people felt like D's 25, as you closed out the 24 calendar year, would settle below $5. Okay. So that
Hmm.
tells me, Chris, that there's a whole lot of people that need to be running balance sheets, return on investments, what's your break even, and do something from a marketing standpoint. I'm not saying you sell the whole farm and you don't have any upside. I mean, that'd be crazy. But I also think that if you feel strongly that this market is set up against you, and if you have a normal crop, that the market's going to fall apart again, you better be real careful, because I think you and I have talked about this before. You looked at 23 and we just put a fortune in that crop. Uh, we stacked the deck against ourselves because we didn't sell enough expensive. When we bought expensive fertilizer, we didn't sell enough high price corn. That's the
Hmm.
only time you see really expensive fertilizer, is when the price of corn is high.
Yeah,
And so
right.
this year, people have this false sense of security that, hey, fertilizer is not near as high this year. I don't need to be as worried about it as what I was last year. Well, if you run your break evens, then hey, I can make money at a lower price than what I could on this 23 crop. How does it look if you take a 60-cent bath? And I'm not saying it's going to happen, but a 2.1 carry, Chris, does not typically equate to $5 corn. And
Hmm.
so again, I got to be a student of that. I got to understand what does a big stocks number typically do to price levels? How do markets act on the heels of a multi-year type rally? And so, yeah, coming out of '08, coming out of 12, especially coming out of 12, the next several years were pretty rough sailing, as we all know. And so, are we going to see that kind of action repeat itself again? Potentially. And so I got to cover my rear end as I move forward here.
Hmm. I love the tune you're singing there because that's the one Shay and I sing all the time is it's all about margin management and making sure you're going to cash flow. We've seen a lot of balance sheets already in some of these farm meetings, and we've seen a lot of working capital erosion for various reasons, things being purchased and changing the cash flow and the inventory of the grain at 450 versus six something. It really changes the outlook for sure.
Yeah.
Um, Anything on soybeans? We've kind of been talking corn pretty heavily. Anything, and you can lead into acres too, because,
Hmm.
I think you look at the corn bean ratio, that's a consideration, but I also think a lot of guys are looking at cost of production. There's some agronomic considerations there, but as guys are thinking acre mix, a lot of them are already set, but what do you think from a macro standpoint? What are you looking at?
Yeah. So, a few things here. 10 million acre disparity in 2023. We're not going to see that in 24. It's
Hmm.
extremely unlikely. What you're going to see is that bean acres will be closer to corn acres. Now, how much closer is a big question. So yes, you drop the price of D's 24 corn by 60 cents essentially. over the course of the calendar year. That would lead you to believe, hey, you're really going to lose a lot of corn acres. But we know that the producer likes to plant corn in a lot of situations. And so, with that being the case, fertilizer relief, if you will, as far as the cost standpoint goes, leads me to believe we're going to still hold on to some acres here. Now, where's my head at right now? I'm probably in that 91 to 92 camp as far as corn acres go. I don't think you'll plant anywhere close to this 94.9 that we planted a year ago. As far as soybeans are concerned, some of these new crush plants coming online, we continue to expand that industry. An originator that works for that plant, their job, is to get bushels secured. And so I do think bids will be pretty strong, like around Shell Rock, Iowa, for instance. I know some of my growers up there that I talk to, they're going to go a little heavier beans than what they have in the past. And then your natural progression, Chris, when you plant 94.9 and 83 and change, would be that bean acres will be very strong in 24. So I don't think we'll be 90 and 90 like I once thought we might. But I do think acreage could be fairly close. Like I wouldn't be shocked if you came in here with 90 and a half and 88 or 88 and a half. Total 180, I don't think it's going to happen. If you can't do 180 in 2023 when prevent plant was very low and commodity prices were sky high the previous calendar year, you're certainly not going to do it in 2024. So I'd say your total acreage at 178 or 9 is plenty rich, and I don't see you getting above that. And so the last thing to address that you asked about was just some thoughts on soybeans. And the thing is on soybeans, once again, is that we've got real tightness here in the US. If you've got old beans, I mean, there's been some places that have really chased those around lately. Crush margins up until the last week or two really were pretty strong. Board crush really got hurt the last week of the calendar year. Do I expect, though, that crush margins will still stay fairly strong into 24? I do. I think that the demand for soy oil and soy meal, which has gone on with the industry starting to really gain some foothold, is going to keep that margin fairly strong. And so, I
Mhm.
think bean prices, I can't get bullish, mostly because of world stock situation. But at the same time, bean prices really hung in there. And so,
Mhm.
it's been very unfortunate to me that more people didn't take advantage of $13 plus no 24. I'm not saying we won't get back there. Uh,
Mhm.
but I think sometimes what we do, and I know I'm getting a little windy here, but sometimes what we do is we look at, hey, we sold cash beans over the last year or two, for what? 16, $17 in some cases. And, by golly, I can't sell beans for $13 and make money. Well,
Yeah.
bull crap, you can't,
Yeah.
I mean, that's a bunch of crap, and you and I both know it. And so we've got to get 21 and 22 out of our head whenever we're
Mhm.
marketing, whether it's corn or beans,
Yep.
and get back to, hey, you know what? There's years you and I have given our right arm for $10 beans, let alone 12.50.
Yep.
And so, as far as bean prices are concerned, run the math, look at what your profit margins are, lock in a worst case scenario on enough bushels that you're going to be able to sleep at night this summer if the bottom falls out. I'm not saying it will, but if Brazil ends up with a 160 plus, Katie, bar the door. I'm worried about what bean prices might look like here
Mhm.
6 months from now.
Yeah. And hopefully we get a chance to get back to some $13 sales too on the new crop. So, we're a
Yeah.
little ways from that, but
Yep.
hopefully as people
Yeah,
are listening
absolutely.
to this and as we head into January or maybe get some opportunities. Last question, and I didn't forewarn you on this one, so you can smile now, but I'm going to ask you a pretty might be a simple question, might not be, but I want to know from 2023, what was your best marketing lesson that you took away from 2023? For you, Matt Bennett, the farmer and the advisor, what did you take away?
Sticking to my guns whenever we try to carry out the plan that we typically want to carry out. And what's that plan is looking at our profitability, running the calculations, and stepping out and doing something with it. So we had a lot of grain hedged at this time of year a year ago.
Hmm.
I know talk's cheap. So anybody who who wants to get the archives to the newsletter I put out over the weekend, I detail what we're doing as a group.
Mm,
And what we're doing as a group is what I follow as a producer, because I could get checked up on those things. So I have to make sure that if I am advising, if you will, if I'm a farmer and I'm saying, hey, this is what I'm doing, I got to be doing that. So, a lot of people a year ago said, I don't know why you guys are so heavily sold. That that's ridiculous. After us having $7 corn this last year, if we have a hiccup in production this next year, we could be looking at $7 or $8 corn. And I guess the way that I looked at it is I'm basing my decision on what kind of profit margin I can personally lock in. And whenever I'm putting so much money into a crop, I I cannot afford to take a big bath.
mhm.
Why? I've been fairly aggressive, in buying some farm ground and, in building my business, if you will. There's just been a lot of things I've tried to be very aggressive on. And so I am very protective of my profit margins. And so I know that sometimes in my world, you know, everyone loves the Monday morning quarterback, and sometimes you're a little concerned that, boy, if I made a big mistake here, I'm going to have egg on my face. Well, who cares? This is what I always say: if your first sale is your worst sale, but it's profitable, you're gonna have an awfully good year. So my main lesson was sticking to your guns, not worry about what everyone else is saying. Market based on your farm's profit margins. And so I preach it to everyone. And sometimes that means some of my producers may not market exactly like I do. Like, for instance,
Yeah.
my dad doesn't market exactly like I do because he has no debt. You
Yep.
know, it's a totally different type of mindset. But yeah, we stayed true to ourselves, and it paid off. It paid really good dividends this year. It may not next year, as far as being really at the top of the list, as far as what our average price might look like, but we're still going to market for profit. And when we do that, I don't think we can lead ourselves wrong.
Yeah. Yeah. No, I love that. I think that's such a key thing is, you know, with the insurance and the marketing and the things that we can do to mitigate risk. I think we really got to employ those tools and really pay attention. But I really appreciate your time today. Um, really hope you have a great 2024 and look forward to having you back on throughout the course of 2024 when you can make the time. And with that said, any final comments you want to leave guys with, and we'll wrap it up.
Yeah, I think again, I think 2024 could be an awfully nice year compared to 23. We again are not going to have as much wrapped up in this crop
Yeah.
as what we had with 23. And so there are opportunities now today. Uh, they may not be here 6 weeks from now, or 12 weeks, or in the middle of summer. So, I think a person needs to be cognizant of what their situation is today, and be very protective of their farm's ROI, because 23, as you suggested, I think we burnt through some cash. I think the
A lot.
liquidity
Yeah.
ratios don't look anything like they did at the end
Yeah.
of 22, and that's okay. We're going to have good years, we're going to have bad years, but every year is different. And I gotta, as a producer, I gotta be a student of this game. I highly encourage people to journal what they did right and what they did wrong in
Yeah.
23, and make sure that they learn from it. Go back and look at it over the course of the time, because it can definitely come in handy on down the road. So I
Yeah.
wish everyone luck. I hope they have a great new year. And yeah, we'll be back on whenever you need me again in 24.
Awesome. Well, Matt Bennett, agmarket.net. Appreciate your time. Thank you.
Absolutely. Thank you.
Yep. And we'd like to wish everybody a great 2024, and we will be back again with the second week of January here next week. Thanks for listening. We'll catch you next time on the AgView Pitch.